Good morning, traders. Chris Buzz here with Traders Profit Compass with your morning look at markets for Tuesday, July 20th. Taking a quick look at futures, down a little bit from the pre-market highs that I saw, but currently ES and NQ are up about 0.3. Small caps up 0.5%. We've got yields dropping further on the 10-year bond. We'll look at that 1.7%, or excuse me, 1.17%. And also Bitcoin is on watch at 30,000. That's a key level, probably both psychologically and definitely technically. You get a drop below 30K, there could be some significant downside there. I don't have the chart here this morning, but if you want to look at GBTC, the Grayscale Bitcoin Trust, you can look at that, or you can always look at futures for Bitcoin if you're trading that. Obviously, you're familiar with the tickers. Oil is basically flat. Gold is up a little bit. It's been wrestling with that 1814 level, which is a level that we want to stay long above. Basically what has happened in the last several days is, we made it up into the low 1830s, and now we're back testing that level at 1814. Might have dipped a little bit below yesterday, but now we're above. So keep an eye on gold. On the macro front, not a lot going on today. Housing starts and Redbook. Also, I'll make mention that the FOMC is in their blackout period ahead of their upcoming meeting. So, Jay Powell can't, rush out and save the market with some kind of comment if we start getting into some heavy selling. So just don't expect to see any Fed speakers on TV or out there making comments. Also, as always, feel free to run this video at 1.25x. You won't miss a thing. I'm not the fastest talker in the world. That'll improve your efficiency a little bit. If you're new here, hit the subscribe button and the alarm bell. I think you'll be very pleased with the content. Give you a lot of objective levels on the indexes and FATMAAN names, as in addition to market perspectives that I think will help you in your trading. So let's get into it. A lot to go over today, as always. Had a little activity in the US dollar. We've been watching this consolidation here below trend and coming up off of this base. Had a little breakout yesterday into this 93 area. Probably won't hear a bunch of that on CNBC or Bloomberg or any of that until or unless we break out here above 93.4, and then we would be really off to the races. I did see a couple of option trades you may want to take note of. EEM, emerging markets. There was a trader out there that bought the October 48-45 put spread 17,000 times. There was also another guy that bought the December 50 puts 5,000 times in EEM. The reason I point those out is they call it the dollar wrecking ball for a reason. A rising dollar plays havoc in foreign markets. You haven't heard about it in a long time because the dollar's been falling, but there's still a ton of dollar denominated debt out there. And so when you have a rising dollar, it makes it harder to make those payments. Now we're relatively at a low level compared to where it was, which was back up at 102 if you look back in the charts. So that was like crisis period. But in general, the FOMC doesn't like to see a rising dollar. They'd rather see it, more or less stable to give the emerging markets breathing room. So watch that trade. I don't have anything on personally in regards to the dollar, but it does link into a lot of the stuff that we trade, so it pays to keep it on the board. The talk of the town yesterday was the dramatic fall in bond yields. You see it here. We've been playing this thing, I'd like to say, like a fiddle. Probably more luck than skill, but that doesn't matter in trading. If you're lucky, that's the same thing as being good. But we did have some technical levels that we were shooting against. We had this break of support here at 140, came down to 130, got a perfect technical bounce and back test, and then the plunge. We came back down here to 130, and now we lost 120 yesterday, and now we're at 1.17. I looked pre-market. TLT is at the highs of yesterday, so it's threatening to go lower. I think on that TLT trade, our next area of support is right in here at 1.14%, 1.14. What I'm going to do, I'm long TLT. I'll probably cover my long into that level. I kind of doubt that we just go right on down to 1%. I mean, anything is possible. New COVID variant, bad headlines, that kind of thing could definitely do it. But I think you're going to get a bounce in here at 1.14. That lines up with this level back here, actually 1.138. I mean, I don't know how fine-tuned you want to get it, but I would be looking for a bounce in this area here. And here's the corresponding TLT chart. We had gotten long in here, got a nice pop. I rolled higher, so I had been in from lower levels, rolled up again yesterday, and I put that in the morning note. So now I'm sitting in July 30th, 153 calls. So getting long in the tooth. I wouldn't be, like I said, I wouldn't be surprised for a check back, but staying with the trade as long as there's no reason to sell, and I don't see a reason to sell right at the moment. Another talk of the day yesterday was oil plunge. I think it was down 7.5%. Here's the USO oil ETF. Here's a trend line I have off of February lows. You can see that yesterday we triggered a fairly significant sell signal. We had seen the 8 and 20-day EMAs roll over, and then that drop yesterday sliced right through the 50-day in green down here to support at 45.50 on USO. So I think that is a great pivot for you guys that may want to trade this. Technically speaking, we back tested the breakout. Here was the breakout at that level. We ran up. Now we've come back. If we go down below and then recapture 45.50, great place to get long. If we drop down below and you want to play the short side, you can stay short against this 45.50 and look for a move to the 200, about $3 lower right here. And I think that would be the technical target on a breakdown here below 45.50. There is a little bit of support coming in here at let's call it 43.50. But at that point, you still have a winner if it finds support there. But I think it would actually come down and tag the 200 at that point. Getting into these oscillators, you guys know over the last couple days that I have brought the magnifying glass in on these oscillators. This is the NYA 50R, not really an oscillator, but it tells the percent of stocks above their 50-day moving average. And you can tell when it gets overbought, they bring it back. When it gets oversold, down here, 26s have been places where reversals have happened. And now that's where we're at. We're down here at 26. Only 26% of NYSE stocks are above their 50. And that's a place where you'd start looking for a bounce. I mean, how much lower do you want to, do you think it's going to go? Here's COVID low at 3%. I don't think we're going there. But could we come down to 20%? Sure. I think that could happen. But right here, the probability of a bounce is greatly increasing. And then here on the NYMO, which is the NYSE McClellan oscillator, I've got my ranges here at plus or minus 60. And yesterday we entered the day, I think, right in here at the minus 50 level. And now we're minus 90. And you can see back in time, I mean, this thing goes back years. You don't see many minus 90 readings where it keeps going south. All these levels here, minus 60s. Here's a minus 80. But all in here, those marked lows and where reversals happen. So the point in the strategy is when you get down here, you got to be trimming shorts, and as it goes lower, just get out of them and reposition long, because a bounce is coming. So, and here's the McClellan side of it. This is the NASDAQ oscillator. By the same token, we're at minus 80. And, there is something carved in my desktop, and it basically goes like this: don't fight NYMO. I've tried it. Believe me, ask me how I know. You short into the hole, the Johnny come lately short. Oh my God, things are bearish. We better buy a bunch of puts and all this kind of stuff. That's right when they reverse it. I've been there before. It stinks. You've got to curb your enthusiasm on the short side and position for a bounce. And then if we get this bounce, then if we think it's running out of gas, or we get some good overhead levels to shoot against, then we can recycle short at much higher levels and at much more objective levels where there's room to the downside, and this rubber band oscillator has relaxed. But getting short here, no. And like I said yesterday, if it goes lower from here, that just means the rubber band is going to snap back that much more violently. And you can look at it that way. The deeper the plunge, the sharper the bounce back. And here was a good example where at the March lows it was minus 125, and then there was a moonshot after that. So, and you can see at some of these levels how dramatic and sharp a bounce you can get out of the hole. Equal weight SPY, we came down and tested the bottom of the range, but it held. For those that are new here are the equal weight ETFs that you can follow if you want to knock out the cap weighted effect of those larger components. Moving on to SPY, we have a sell signal. Why? We dropped below trend. We dropped below the 8 and 20 day, and now we're down here at the 50, which held yesterday. You can see that back in time, the 50 has done a good job of containing price during this run. Can it break now and change that dynamic? Sure, but we have a perfect level to shoot against, and that level is 422 on the 50 is at 423. So you can use that 50 as a benchmark level, that if we bounce and then lose the 50, then we got a lot of downside potential there. If we lose the 50, you can see the 200 is way down here at 390, and so that would be certainly a dynamic short side trade if we got in, on a break of the 50 and came down here. But that's putting the cart way before the horse. Notice the position of the indicators. We got a bear cross on PPO with the bearish divergence, and we've got RSI rolling over below 50. So those are flashing bearish. Now you say, Chris, well, why don't we want to get short if we're flashing bearish? The NIMO and NAMO are oscillators that simply tell us we've gone too far, too fast to the downside, and nothing goes straight down forever. There are bounces in between. So the bounce idea is tactical, whereas this is a longer term sell signal. So we've got to hold both of those in our minds at the same time, that we have broken trend. We're at the 50, very important juncture, but we're probably stretched to the downside and looking for a bounce. 2 hour. Got some really nice lines for you to shoot against if you're an active trader. Let's look at it. We gapped down and then we came down. Here's the 50 in gold. We came down, undershot it a little bit, and then had a nice closing bar back up to the top of the range. So today, you can almost set this up as a bracket trade. Above 425, you can be long and look for a move to 427 into the gap. And if all the stars align and buyers step in, look for a gap fill to 431. If you got all that today, if you got in at 425 and saw price go all the way up and fill this gap today at 431, I would certainly be taking profits there, rolling all that up, taking it to the bank, going to even money, and seeing if that tag of the 50 was just a one-day wonder, and we've seen that before, and then see if price could recapture. But then once we get up there, if that fails, if we get up, close the gap, and then they start turning it around, then you can get short against the top of the gap at 431. And even for a simple move of back testing the prior low, that would be a great two-way trade to get it on the way up and then reverse and get it on the way down. That's just a couple of scenarios, but all I'm saying is, remember, this is unfinished business, and that's a pretty big gap. I wouldn't be surprised at all if in the next day or so, with those oscillators stretched, we make a quick move up here. Remember, there's a ton of people that bought puts yesterday because they were in a panic. And what the market does is then they're going to panic them the other way. Oh crap, I just bought puts and now they're ripping it, so I got to get out of my puts and get calls. And then right about at that point, the gap fill is over, and then they reverse, and then all the people that bought calls up here are, of course, losing. So we want to be on the right side of that trade. So make a long story short, use 425 as your pivot this morning on SPY. Here it is on the 30-minute chart. Nice expanded view. Even this trade here, if we saw a little breakout this morning that failed, that they couldn't bounce it, you can get short tactically. I'm talking about just during the day. Get short against 425 and just play for 422. That's $3. And I think if it breaks out here this morning and then comes back inside and fails, I think it is going to go to 422, because that was the range from yesterday, pretty wide range at that. But then look for this gap fill. I've noted a couple little sticking areas potentially of resistance overhead, but in general, we've seen it before. Once you get inside the gap, odds favor that they go ahead and fill the gap there. Qs, same idea as SPY. RSI, trendline violation, PPO, trendline violation, uptrend violation, price below the 8 and the 20. What does that say to you? Become defensive, become tactical. Here, above all the moving averages, be strategically long. With everything aligned, as we talked about, everything stacked, that has changed. Now, we lost trend, we lost momentum, we lost RSI. We're here below the 20. You got to be tactical. You can't just sit in longs and watch this thing pull back to the 50. But the oscillator is stretched. I favor a bounce right here. 2-hour chart. Again, a very nice setup for us today. We've got a range here between 355 and 352. That contained all of the trading yesterday. I think you break out above 355. You look for a gap fill up to 357.80, and then there's your big decision point. Do we break out and go higher, or do we get rejected and then come back down again? So I favor using this 355 as your pivot. Let's just look at the 30-minute chart. It's easier. Use this 355 as your pivot. You break above, you can get long and look for that $2.50, $2.60 gap fill, and then you'll have to watch bar by bar. Does it get rejected here at trend after the gap has filled, or can we break out? But if you get that move this morning, make sure you take profits. Make sure you roll up to even strikes. Don't let them take that all back after a quick move. And then on the way back down, or this morning, if we break above and then fail below 355, then you can be short and look for a $3 move back to 352. IWM, totally different look. Why? We are at the bottom of a $23 consolidation range. Simply put, IWM has got to hold it together here. Why? You get much below this area here, then you've got a break of the consolidation range, and you've potentially got $23 of downside, which would put price down at 190. So I would be keying off of yesterday's low, which was 209 here. That was the low. And actually yesterday, we fell a little bit shy. I had 215 as the gap fill, and we got to 214.50, so we were 50 cents shy. But look at the technical action. We bottomed here. We had two candles reach down to 209, and then we got to move all the way up to 214.50. That's almost a $6 move. I mean, that's real money on a day trade. So keep an eye on IWM for the simple fact that it can move when it wants to move, and you don't need too many, $6 moves to pay some bills over at the house. And then look what happened. Basically a gap fill, and then they brought it back. So just in those two candles, you had like $10 of movement, and that's a lot. So here today, use 212. You break above 212, I think it can go back to 215. If it can't, you might retest 209 at this low. And then you break 209, get short, tactically get short, and see if there's a flush there. Let's move on to Facebook. Terrible price action. I put in a channel here off of the highs. Yesterday, we had a gap down, but we also had a reach up candle. So I don't show a big overhead gap here. What I would tell you is key off of 338 and 335. If price can take out 338, you can find 340 and then 344. You break down below 335, you could come into this 334, but below 334, you go into 330. I don't see the downside, but you got to be ready for it. We've got earnings on the 28th. We've got a day where the oscillators are stretched. If I were looking for something, I'd be looking for a long, but just have your downside areas marked in case what we are looking for doesn't happen. Keep that flexibility in your mind. Keep all options open. Don't lock into some kind of a narrative that, oh, this is turnaround Tuesday, we're going higher, because the market has a way of not doing that. So if you do get a downside break and you want to trade Facebook, I think a break of 335 would be the place to do it. Apple. We talked about yesterday, this 140, 150 would be a place to look for support, and it spent all day there. I mean, basically, there was support here, came down, lots of tags of 140, 150. As long as that holds, I think you can be long. The real test comes at 144 to see if we can get a gap fill back to 146. We've got earnings next week. If the Qs start feeling it and you get a move up to 144, you can look for that gap fill. I'm already long. I'm kind of long against 140, 150. I've got some short-term calls. So obviously I'm talking my book, but it's objective. All these touches of 140, 150. I mean, if it breaks today, it breaks. I'm stopped out. You got to take your shots where you think you see something. And what I saw yesterday was all day spent at 140, 150. And each time it got down there were responsive buyers. So I'm hoping that that's a little base like it was back here, and we get a lift into today. Tesla had a decent day. Actually, closed green. We had this uptrend line, came down here to support. Our lines are working the way they're supposed to. This was the consolidation range. We came back for a test. We thought we had a breakout, came back for another test, and now has recaptured this trend line. I would just use this 645 as your pivot. But what you really need is this 555 to be taken out to open up 670 and 690. What you don't want to see as a Tesla bull is losing this 625 and then going back in the consolidation range. Microsoft, very much like Apple in the sense that after the initial drop, it just sat there all day against this 275.50. If you wanted to try a long and you got an entry down towards 275.50, I would take it with a tight stop. Otherwise, if you get a break above 277 this morning, I would take that long and see if you can get a move back to 180. But you can see support, lot of support. And so I think there's been some muscle memory developed there at 275.50 and responsive buyers there yesterday. So I'm hoping that it can pop 277 and then make a run up to 280 with earnings next week. Amazon did nothing all day until the final bar, popping up here to 35.50. And that number should resonate with you. 35.50 was the breakout. And from a technical standpoint, we got to recapture that level, 35.50. You don't want to spend much time back in this consolidation range. Right now, I'm willing to call this a breakout and a back test, but it's got to hold the line. It's got to hold the line here, and I would feel a whole lot better if it could recapture the 20, and I would consider that a nice save, a nice result of getting back above that line. And don't forget, Bezos is going up in space today. There might be, God knows, a relief rally if he makes it back alive, and God help us if he doesn't, right? Whenever you go into space, it's a binary result. You either come back alive or you don't. And we got the stock right here. He comes back alive. For that, maybe we get that lift. So anyways, Netflix had a good day. Was green. We're back into these pivots that we used before. We back tested the gap successfully. Now we're back at 532.50. Use that as your pivot. Earnings are after the bell. So I don't hold through earnings. I don't have any strategies. I've never found a strategy that actually works at earnings other than guessing right. And I don't want to do that. If you've got an earnings strategy and you want to do something with that, or you want to take a shot, that's great. But the most interesting thing tonight will be sentiment. Do they post great numbers and get a big lift? Do they post bad numbers and the stock goes higher? Or do they post good numbers and they pull the rug out? That may be a harbinger of things to come for the Fat Man trade going into next week. And so I'm going to use Netflix as, a big sentiment gauge on mega cap tech. Google came down here to support. Simple trade. Use 2480 as your pivot. As long as it holds that, I think you're fine. You can look for 2505 and then 2530 on a rebound. You get down below though, you're probably going to fill this gap and back test this trading range here at 2450. Even if all that happened, you got a breakout and a back test. So all would not be lost if it came back here to 2450, as long as that held. And I would expect that it would, but you don't want to come back in below, just like we talked about on all the other instances. You don't want to come back into this trading range and then get back into the 2400s down here. So let's see if Google can bounce here and get back on track towards the top of this trading range at 2530. And then let's wrap up here with SMH. This has been the bane of our existence here lately, especially if you've been trying to trade it to the long side. A couple of false breakouts that failed, and now we're below all the moving averages, and we found support right here at the midpoint of this big $35 trading range here at 240. And we did get a good bounce off of that. So I think going forward here, near term, you can be long against 240. I think if you got another move back down or a wobble and got closer to 240, I think you can be long. I know a couple guys in the trading room were getting long, but at lower levels down towards 240, like 241, 242 on that first opening bar, and got a nice lift. Other than that, I would like to see the 50 DMA or EMA reclaimed, and that would be the first big technical event for the bulls, is to drop back down below and then recapture the 50 and then hopefully move back up towards the top of the range. On the downside, if this wobble turns into a big correction, you lose 240, you're coming down to 223. and that would be a nice short trade. You got the 200 coming in here about 224. Actually 226.75 is where the 200 comes in. So if we, wobble in here and then lose 240, that would be a very objective place to get short and then look for a move to the 200, which would be $13 lower. And, once it did that, I think it would just go ahead and touch the bottom of the consolidation range, and then we would know or be positioned at that point. If this whole thing breaks down and we drop below, then we can be pretty much assured that we've put in a top and then we're on the downside of it. So let's wrap it up there. A lot of stuff today. I'm looking forward to a bounce, but I don't have my heart set on it. I've got my stops in place. Let's see what they do today with these oscillators stretched to the downside. Hopefully it'll be a turnaround Tuesday where we can get a healthy bounce, fill some overhead gaps, be positioned properly, and then we can decide where we want to take it from there. I do want to tell you on a personal note, I've got a couple of appointments this morning. I'm going to have to leave shortly after I post this video, so I'm going to miss the open, but I should be back by the noon hour at the latest, and then I will pick up commentary and kind of give you what I see, where we're at, in the early afternoon hours, and then see how we wrap up today. So I will be missing an action here at the morning session. So I'm sure you're armed and dangerous now with all the levels, and that if you honor them, use them to trade off of, and honor your stops, most importantly, that you'll do just fine. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you soon.